Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. It's Casual Friday, I'm Mastro, and this is your routine briefing. And it's pretty much a debrief at this point. 10:37 Eastern in the morning. The morning session is about finished. I've been working on the newsletter, trying to make that content super valuable, or as valuable as I can make it. And so that's why the tardy start. Lots of good stuff in there today. That is retailtrading.com if you're unfamiliar. And I've been posting, I started this week posting kind of a review at the end of the day on Twitter, where you can find me at Routine Trader. And I think that might be helpful as well. So I'm just trying to, as much content as possible, as I try to systemize my own homework, and that's kind of the purpose of all this, and obviously to long-term for everyone to benefit and for me to benefit from you when I have more than 2 of you watching these lovely videos. So speaking of that, let us hop right into it, and we're going to start with the warm-up document just to kind of get our bearings, and we will go from there. So it's OPEX. Lots of choppy action to be expected. Lots of choppy action so far. We actually had a couple potential trades. So I did end up taking a long trade on the pullback. So we had this continuation / reversal candle. Not really sure how you describe that at the open. And then we had kind of the same look. I believe that was like the 10:15 candle, 10 o'clock, 10:15 candle, showing the potential reversal the other way. And so I'm long. I'm only long with a 1/3 size position just because it's OPEX, and I don't really have an idea where we're going, so I'm just kind of playing the probabilities, and I don't want to get hurt too badly if I'm wrong. So this will be one of those cases where I will add to the position if and when we do have some type of squeeze. Yet until then, just kind of hanging out and waiting for some type of confirmation. So it's OPEX. I think I've said that a couple times already. So what that means is we can expect a lot of weird action. I know today's OPEX is something like 2 trillion and options are expiring or something. It seems like the numbers are always going up, but it's a pretty big OPEX, as they all tend to be, and they also all tend to be pretty choppy. So like I said, just kind of hanging out small. If I win, that'll be great. I'm kind of targeting a pretty big win, so like I said, I'll add and I might bring that down a little bit. And if I lose, well, it won't ruin my week. It's been a pretty good week and not really a very busy week. I've had 2 trades so far this week. Both have worked out. Both have been nice winners. And then this will be the 3rd. And again, it's super tight, super small, unless we get that add. And if we do get that add, it'll be break even. So that's what I got going on. So let's look at that warm-up document that I just mentioned a few minutes ago. Let me make sure I'm not too big on the camera here. All right, excellent. So inventory, no surprise, overnight, down and balanced. We've been having a lot of that balanced overnight inventory. You haven't seen that 100% net short, or really any type of net short or net long this week. So you do have that balanced inventory. That's kind of why we tend to chop around in the first part of the regular trading hours. And today we did also get another one of those open test drives. So that's why I went with the long trade versus the short trade. The open test drives have a higher probability of putting in the low for the day, so it's a really easy trade, just hanging out, putting my stop below that low. If it gets unwound, that's a lower probability than it not getting unwound. So that's really, I think I have a greater than 50% chance of being correct, and that's really all I'm going for today. But again, we're fading trend if you're long. Yes, we have 10 out of 13 of the past days have been red. yet the trend is still down. We're still below that 436 SPY area, which is my main level. We're going to talk about the price action in just a second, but the trend is definitely favoring the bears. Thank you, Sherlock. So moving on, let's actually go talk about some of that price action, and I'm going to bring this over here, and we are going to jump into that weekly chart first. I'm actually just going to let me go to my newsletter here, make sure we cover everything all at once. It's a little bit more background. So all pullbacks tend to end with a flush. And this hasn't been a super dramatic flush, especially looking at volatility, which we'll get to last. But it's been a pretty darn significant move down. You've had 3 days in a row of outlier clustering. We've closed beyond the expected move to the downside 3 days in a row. The first of those days was almost at that 3 sigma level. We have 10 of 13 of 10 of the past 13 days in ES have closed red, and now we kind of opened near that underside of the expected move for the bottom edge of the expected move rather, which would make it a fourth day, 1, 2, 3, 4, yep, fourth day in a row if we do close lower. So we're definitely gambler's fallacy, some might say, but I think we're definitely getting to the point where up is more likely than down, at least short term. So key word there is short term. I'm not even talking intermediate term until we address this 436 gap. So let's start there and look at what we got going on that weekly chart. So you can see here, top of value, we are currently below it. So there's a couple things that can happen here. First, I'm just going to go ahead and bring the warm-up document back here just so we can look at it together. Let me make sure I'm not hiding anything. Okay. So again, as I always say, the warm-up document as well as my other resources are available in the description of this video if you want to check it out. So what are we looking for here? Well, we're looking for a setup 3 at first. So it's not going to be perfect because this is the overall value, so it comes from the top of the bull market, if that is indeed going to be the eventual top. So just because we're not bouncing at 436 does not mean that we are failing and falling back down all the way to that POC. It's more of a zone than a specific level. Yet the first thing we're going to look for is going to be that setup 3 where we were outside balance. We were in that state of imbalance that I talked about ad nauseum. We were the farthest extension beyond that 4 standard deviation VWAP that I could find in terms of just raw price. So we were basically at max overextended. We had that SPY 443 gap, filled that as well, and we were in that state of imbalance, and so now we're coming back to test the top side of balance. So assuming that we're still in a bull market, which again, I just keep talking about volatility because volatility is really hinting to me that at least right now that this down move does not yet have legs. So if that's the case, what I'm looking for is kind of a bounce here and a pop higher. So do we make a higher high? I don't know. We'll play that by ear. Yet really, it's looking for that reclaim of 436. So another alternative is setup 1. So we are below that 436 area. We definitely have accepted a little bit back into that value. So once we get there again, which could definitely happen today, in fact, it could happen during this briefing. We're about 10 points away. It's about 43.80 on the SPY. You could potentially see an acceptance of value. So if we go back to, let's say, about 43.80 today, test it and start selling off again, well, you know what? Maybe this down move does actually have legs. So that's really what I'm looking at on the weekly, all about that 436 area. The headline for today's newsletter is the Battle of 436. This is the most important area to me, above at least that 423 gap, which is far away, but really above 410, I think, including the highs. This is just a very, very significant level. And so it's going to be important to watch exactly what happens here and not to get too granular on it. Remember, weekly chart, this is overall value, etc. So it's important to take that lens when viewing it, in my opinion. I'll move that warm-up document out of the way. Okay. I think that's all we got to talk about with 436. So I'm definitely surprised. So I was talking about yesterday how I expected us to go test this level. I did not expect that to happen yesterday. Just again, it's been a very, I would say, outlier move to the downside in terms of consecutive days red, 10 of 13, and also just we're kind of stacking those days beyond the expected move now without volatility really getting too much higher. So volatility is not breaking out, still diverging. Again, we'll talk about that in a second. That's really the major theme, though. That I'm kind of thinking about behind the scenes. So that's why I keep bringing it up. So yeah, so let's go to, let me see here. I'm just looking at my notes. That's what I'm looking at on the screen here. Okay. So just one more thing on the chart. Say it once more. 436 fails according to the subset that we just discussed. 423 gap, and then 410 eventual target. Just want to keep that clear. This will all be packaged in the newsletter, obviously. So for bulls, a couple things that we got to worry about here. First off is going to be the bull flag. We did break away from that bull flag. So again, a reclaim of 436. If I just draw this horizontal, you can see what I'm talking about. Reclaim of 436 will also correspond to a pop back into that bull flag. So that's really the first major structural win for the bulls. All comes down to 436. So I don't think I need to talk about that anymore. After 436, obviously we'll be looking to see what happens around this major sentiment pivot. Remember, all week that cyan trend line has been what I call the sentiment pivot. I'm going to start using that more often. I think it's a good, I don't know what you'd call it, a good instrument, we'll say, to kind of gauge the attitude of the market. So today, we're just really looking what happens around 43.80, and then we'll go from there. We don't got to get too granular there. Really, I'm looking at it even on a shorter time frame on this TPO. So watching what happens on this TPO. Again, we're near that high a day, that IB high. Watching, remember our statistic, a 5-minute close beyond the IB high creates an 88% probability that the low of the day is in. So as we pop this, let's watch for that 5-minute close beyond that IB high. And again, for me, that'll be my signal to add to the position. So that's what I'm looking at there. All comes down, again, I'm just watching this TPO chart pretty much all day, watching 43.80. That's the most important level. We start to accept above 43.80, and that's when we start to look at maybe 4400, maybe 4410, maybe higher. But 436 on SPY, 43.80 ES is the really all I'm looking at for today. Don't got to make it too fancy. Might look at VIX here, so now we can finally talk about volatility. So still divergent. We have not made a higher high despite the market making lower lows. We haven't even hit that 20 level, let alone the 21. We haven't even broken out of the triangle. We're still kind of filling it out. So definitely watching today. Push above 20. Okay, maybe then we'll have some continuation to the downside above 21. Things get super interesting. This looks more like a double bottom, and maybe volatility really gets its legs going, running, whatever the idiom is, and that's when looking for that quick move to 423, possibly to 410. Yet I don't see how, especially again, given the outlier nature of the consecutive days red, or 10 of 13, they're not all consecutive, but just that many days red without a big push in volatility does not, to me, indicate that we're going to see that continuation. So obviously we'll see. We're not doing the crystal ball thing. We do a little bit of the crystal ball thing just for fun. Yeah, we just trade around, reacting to our levels and the various signals. So once again, you can see the signals that I'm looking at in that routine day trading document if you're so interested in the description of this video. But I think that's enough content for you. I'm going to pack this all up in the newsletter. Like I said, there's a lot going on, so I will have that nice and clean for you in the newsletter. I'll send it out very shortly, and I hope that you are finding this valuable. If you are, I appreciate the thumbs up. Helps with that YouTube algorithm and the quest to get above, which is now, we'll say, 9 viewers. If we can get back to that double digits, that'd be really, really swell, I'd say. And, maybe then we might even get to 15. We'll see. Don't want to push it, one step at a time, but I appreciate any engagement in the comment section, just replying to the newsletter itself, or on Twitter at Routine Trader, which again, I'm going to start having those end-of-day reviews there as well. So regardless, I thank you for your attention. I hope you have an excellent weekend. I'm going to go hop on Twitch here now. Stay classy.